We are seeing wild swings in markets and oil prices after U.S. President Donald Trump backtracked on attacks on Iran's power plants, with conflicting reports emerging about a possible ceasefire. How should you invest, and what are the potential stocks you should look at or avoid? To break it all down now, we have Sebastian, founder of Option Pit and CIO of Karman Capital, joining us. Good morning. It's good to have you.
Thank you. It's good to be here.
There's a lot for investors to kind of wade through, right? Especially when you get conflicting reports on a big conflict such as this. How do you think investors should be listening to what we're hearing from the U.S. and from Iran, or should they maybe not even be listening to that?
I mean, until there are ships going through the strait, then, nothing else really matters. Markets are, these news reading algos are going to react to what they see. But, the time to jump in, the time to go, short oil, long the market, when you start seeing ships pass or they're cleared to pass. And right now, that's not happening other than a few kind of, outlier occurrences. So that really just watch the strait. If that opens up, then oil is going to roll over as quickly as it. Not all the way down, but it will roll over to a much more reasonable level in a very short order.
Yeah, I think that's another thing to note as well, right? That even when this does end, given what's happened and all the infrastructure that's been damaged or destroyed, it won't return to levels that we saw before this conflict.
Well, not from 6 months ago, but prior to the official beginning of the conflict, there was already a pretty decent $5 to $10 risk premium built into WTI and Brent, based on demand, based on the output. They were trading a little rich. So I wouldn't be surprised if we got back to where we were right before some of that bombing happened, but under the understanding that that was actually already a little bit too expensive. And then long term, a year, 2 years down the line, if this works out, the lifting of sanctions on Iranian oil, that's going to eventually cause depressing effects on crude.
Okay, so that might be what happens in the future. But given what's happening right now and the wild swings we've been seeing in the markets, how much confidence do investors and traders have right now, do you think?
Well, I mean, the headline indexes are moving around a lot. And if you look at the numbers, right, the high in the S&P was just under 7,000. We're currently trading 6,550. That's like a 5% sell-off. It's not like the bloodbath at the top line level has really been that bad. It really hasn't been a bloodbath. It's been a selling. There's more pain over in the NASDAQ, and part of the reason around that is what was actually already happening before this conflict began, and we were seeing money rotate out of Mag 7 and moving into kind of the inference phase, as my friend Hans likes to say, Hans Albrecht, inference phase, because companies that are actually going to use AI to make money, make product, those are the names that even now are still outperforming, right? The Russell 2000 is outperforming the S&P and the Qs on the year right now, and that's because they're the kind of the net winners of AI. They're not the makers, the manufacturers of AI. They're the user. Think about what the automobile did for delivery companies relative to having a horse. That's really the point we're at right now with AI and where the winners are coming out of this. The selling that we've seen there, yes, oil is at the top line, but to know that this is really over, I think you look at U.S. bond markets. U.S. bond markets have had just a massive sell-off. We've seen predictive markets and the CME FedWatch tool go from 3 rate cuts on the year to 0 with the possibility of a rate increase. That's really kind of, I think, the big story that's not being reported and not really being talked about is that move in interest rates and how that affects these big industrials, these big winners out of AI. Are they going to be kind of slowed down by the move in interest rates?
The volatility index, meanwhile, is in a bit of an unusual spot. The curve is essentially flat at the moment, despite a high level of uncertainty. So why do you think that is, and what does that tell us, do you think, about the markets?
I mean, at this point, when you look at the VIX and the relationship of VIX futures, past April and May, they've kind of thrown up their hands and say, we have no idea. There's normally when volatility is high like this, you would see VIX futures kind of think like betting on where the VIX will be in, let's say, July, August, September. You would see those betting at a significant drop in the VIX index, and right now they're really not, which tells me that, option traders going all the way out have kind of thrown up their hands at, will the VIX be higher, will the VIX be lower? Near term, they're still pricing in, the big option traders are still pricing in some continued volatility, with the anticipation, though, that we could see a little bit of pullback here in the coming weeks.
Okay, so I want to go through some of the stocks that you like and some of the ones you don't like. We'll start with some of the ones that you like. Dell and HPE. So what is it you like about these two?
I mean, so this super microcomputer story,
yes.
I still wonder whether there's a bigger story here, right? You have, and there's my dog. You have...
Always welcome.
Yes. You have SMCI, which, we know about it, the fraud thing. It just... From a logic perspective, I don't have any specific details. I'm not talking to the FBI or anything like that. How does a company buy $2.5 billion worth of chips, and you, the seller, have no idea where they're going and how they're getting moved around? And to me, that presents some risk. So obviously, I think SMCI is going the way of the dodo. I think there's some real risk to NVIDIA. Winners out of this are the ones we know are not going to be selling to China. So you're talking Dell, you're talking HPE, that do essentially similar services, maybe an IBM, maybe an Intel, that do similar services that are going to basically be able to take all of this business that was going to SMCI outside of the illicit part that was being sold to China.
You say Microsoft is starting to get a little cheaper now as well. What do you think about Microsoft?
Yeah, I mean, you look at how far that thing has gone. Yes, they've got some issues. Copilot's not great. There is threats to their software. But remember, Windows, a lot of this all sits on the Microsoft platform. They have huge investments in ChatGPT. They own a significant portion of that. There's arguments that that piece alone, if ChatGPT and, OpenAI turns into what a lot of people are predicting, could be worth more than Microsoft as it is. As a long-term investment, I think it's getting to the point where it's starting to be interesting. Software, there are areas where there's a real risk, like Adobe, I'm not interested in. But Microsoft is going to be around. They're going to be fine. They're kind of ahead of the curve on at least on the investing side of their business. So there's going to be a spot where this starts to look very interesting, and I'm starting to get there.
And speaking of interesting, you think gold is also starting to look interesting?
Yeah, I mean, it's basically given away the entirety of that huge run-up we had in the middle of the year, or at the beginning of the year. And we're now back sitting where we were in December. I do like it long-term. I think when the conflict ends, you're going to see the dollar pull back. That's going to be good for gold. So when we see ships going through the strait, that's probably an interesting time to get into precious metals.
And before we move on to what you don't like, I just wanted to ask you about NuScale Power Corporation as well. You think this is one that's under the radar? Yeah,
this is a long shot play. They're doing small nuclear reactors. They haven't got a contract yet, but the technology is really good. It's like an $11 stock. And what we've seen now, I mean, if you look at the geopolitical risks and the environment, and there's still the overarching, environmental aspect of oil and nat gas. Nuclear is the cleanest, most efficient way to do this, and these small power plants are going to be really effective in theory for AI, terrestrial AI data centers going down the line, at least until we can get data centers in space, which is, I think several decades away. Near term, they're going to need an efficient way of putting power into those data centers. And a company like SMR that can set up a small nuclear reactor and get it up and online rather quickly, there is a real long-term viability there. And if they come out one of the winners here, the stock's going to be worth 5, 6, 10x.
The thought of data centers in space is just wild. The fact that we're already starting to talk about that. Okay, before we wrap up here, sectors and stocks you're kind of staying away from. We already talked a little bit about NVIDIA, but you say memory stocks in general are overbought?
I mean, look at the run-up they've had. Micron, SanDisk, they have exploded. The solution to high prices is high prices. That's what they've said in the commodity markets for years. Now, the process for getting into that is a little bit slower, right? We're finally seeing AMD start to have platforms like NVIDIA and be able to compete with them, and that's having an effect on NVIDIA, among other things. These stocks they've grown dramatically in anticipation of the next 3-4 years of earnings. Not saying they're gonna roll over and crash, but they're overbought, and I don't see a lot of huge upside left in these. So if I was sitting there long holding them, I'd be looking to pair some gains here.
Is that a similar story for XLE as well?
Yeah, XLE is a direct tie to oil. It's going to have a similar path to energy. Difference being is when it pulls back. Unlike oil, which it pops and then drops, I think these companies are in a position for the next several years with the need for energy, oil getting cheaper. They're going to be a great long-term investment. But with up 50% in 6 months, I think it's moved pretty aggressively and gotten this extra risk bump out of the Iranian conflict. When that comes off and XLE gets back down to the 50s, I am a buyer.
Okay, we'll leave it there. Mark Sebastian, founder of Option Pit and CIO of Karman Line Capital. So good to have you join us today. Thank you.